Hey, Stock Explorers. Welcome to a deep dive curated just for you into Lyft.
Yeah,
You're interested in this company, and
for good reason.
right, they've had a phenomenal year.
They really have.
Record highs for rides, riders, and driver engagement.
Uh-huh.
They even achieved something pretty remarkable, profitability.
Yeah.
But here's the thing.
Okay.
There's a ton of price pressure in the rideshare market right now.
Right.
So can Lyft keep this momentum going?
It's a great question, and it's not a simple company doing well story.
Right.
Lyft is making some strategic choices that are really paying off,
Okay.
but there are definitely challenges on the horizon.
Let's unpack this.
Okay.
One thing that really stands out
Yeah.
is Lyft's focus on what they call customer obsession, going above and beyond for both riders and drivers.
That's a smart move, I think.
Okay.
In rideshare, your biggest competitor isn't always another company.
Right.
It's often just people sticking with what they know.
Inertia.
Exactly.
Yeah.
So Lyft has to give folks a reason to switch and then keep them coming back.
So what are they doing that's actually making a difference? I saw their average rider pickup times are now a whole minute faster than last year.
That's a huge win in the rideshare world.
Really?
Think about it.
Okay.
A minute can feel like forever when you're waiting on the curb.
For sure.
And it's not just riders.
Okay.
Lyft drivers are actually choosing Lyft over their biggest competitor by a 16% margin now.
Wow, 16%.
Mm-hmm.
That's a pretty significant jump.
Yeah.
What's driving that preference?
Well, Lyft's really focused on improving the driver experience.
How so?
They've increased pay transparency, they partnered with Merit America to offer skills training,
Okay.
and they're even using AI to streamline driver support.
Speaking of AI, Lyft is using Anthropic's Claude AI to power their customer support,
Mhm.
and it's already saving drivers a ton of time.
It is, yeah.
Like, how much time are we talking here?
They're estimating that Claude saved drivers over 28,000 hours in January alone. Instead of being stuck on hold with support, those drivers are out on the road earning.
That's incredible.
Yeah.
It sounds like AI is having a real impact on Lyft's operations.
It really is.
But let's get back to those price pressures.
Okay.
Lyft recently launched a new feature called Price Lock, which feels like it could be a game changer.
Price lock is interesting.
How so?
Essentially, riders pay a small fee up front to lock in the price of their ride,
Okay.
even if surge pricing kicks in later.
Interesting.
Kind of like a mini subscription for predictability.
Okay.
Yeah.
And it looks like it's working.
Yeah, it does.
Lyft reports that 70% of Price Lock riders are coming back month after month to buy more passes.
Yeah, and Lyft actually thinks most of these rides are incremental.
What does that mean?
That means they wouldn't have happened without Price Lock.
Oh, okay.
It's attracting new riders and encouraging existing riders to take more trips.
So is this the beginning of subscription-based rideshare? Will we all be buying monthly passes for our rides in the future?
It's a fascinating question.
It is.
And Lyft's clearly committed to Price Lock.
Yeah.
It's now available 24/7.
Okay.
And riders can even pause it when they're on vacation.
So they're really listening to customer feedback.
It seems like it.
Okay, let's shift gears a bit.
Okay.
Lyft is also making some strategic moves into higher margin services.
Yeah.
I'm talking about Lyft Black and Lyft SUV.
Right.
Those saw a 41% jump in 2024.
There are a few things to bring that growth.
Okay.
First, they've refined the vehicle eligibility for Lyft Black,
Okay.
creating a more exclusive experience.
So you can't just use any old car to
Right.
be a Lyft Black driver.
Exactly. Second, they've added more Black car drivers to the platform.
Okay.
And third, they've expanded Lyft Black to 64 markets across the U.S. and Canada.
Wow, so they're creating a more premium experience,
Yeah.
making sure there are enough drivers,
Uh-huh.
and expanding availability.
Right.
It's a pretty comprehensive approach.
It is, and it speaks to Lyft's awareness of changing demographics and
Yeah.
rider preferences. Right. There's a growing demand for upscale rideshare experiences,
Yeah.
and they're well positioned to capitalize on that.
Now, for something completely different,
Okay.
let's talk about Lyft's foray into the world of autonomous vehicles.
Lyft's approach to robo-taxis is interesting.
How so?
Instead of building their own autonomous vehicles,
Right.
they're positioning themselves as the platform for other
yeah.
companies to launch their AV fleets.
So they're creating the ecosystem,
Yeah,
the infrastructure for robo-taxis.
exactly.
That's pretty smart.
They recently partnered with Mobileye and Marubeni
Okay.
to launch robo-taxis in Dallas as early as 2026.
Wow. And who's Marubeni?
Marubeni's a Japanese trading company.
Oh, wow.
Mobileye will provide the self-driving tech,
Uh-huh.
and Marubeni will finance and manage the fleet.
That's a pretty unique partnership.
It is, and it really shows Lyft's commitment to this technology.
Right.
They're not just dipping their toes in the water, they're diving in head first.
So what does this mean for the future of transportation? Are robo-taxis really going to be a thing?
The potential is huge.
Okay.
Imagine rideshare with no driver costs.
Wow.
That could lead to incredible profit margins for Lyft
Yeah,
and make rideshare even more accessible and affordable.
for sure.
But there are also huge hurdles.
Like what?
Well, there's regulatory uncertainty.
Yeah,
Governments are still figuring out how to regulate self-driving cars.
that makes sense.
And then there's public perception.
Yeah.
A lot of people are still hesitant about the idea of riding in a car with no driver.
It's definitely a big leap.
Yeah,
So the robotaxi future is still uncertain.
it is. It is.
But it's clear that Lyft is making a big bet on this technology.
Definitely.
Speaking of big bets, let's shift gears and
Right.
talk about Lyft's financial performance.
Yeah.
They're not just profitable,
Uh-huh.
they're also generating strong free cash flow.
Right.
And they just announced a $500 million share buyback program.
That's a pretty significant buyback.
What does that tell us about Lyft's outlook?
It signals that Lyft is confident in its future.
Yeah.
They see their stock as undervalued
Okay.
and are taking steps to return value to shareholders.
Uh-huh.
That buyback program sends a strong message.
Yeah.
They believe their stock is undervalued.
They're putting their money where their mouth is.
Exactly.
Yeah.
They're also paying down debt,
Okay.
which strengthens their financial position even further.
So they're setting themselves up for sustainable growth.
It does.
It paints a picture of a company that's on solid financial footing.
It does, and it's a remarkable turnaround from where they were just a few years ago.
Really?
They've gone from burning cash to generating cash,
Okay.
and now they're actively investing in their future.
It's an impressive turnaround.
Yeah, but even with all this momentum,
Okay.
there are still some questions about Lyft's path forward.
Like what?
Well, the price pressure and competition in the rideshare market are real challenges,
Yeah.
even for a company as well positioned as Lyft.
So the question remains,
Right.
can their focus on customer obsession sustain their growth and profitability in the long run?
Exactly, and that's what we'll explore further in the next part of our deep dive.
Okay, sounds good. So let's dig into these competitive dynamics
Right.
that are putting pressure on Lyft's pricing.
Yeah,
Seems like this new wave of price changes kicked off late last year.
that's right. During their recent earnings call, Lyft's CFO, Aaron Brewer, acknowledged that prices are down across the entire U.S. rideshare market.
Wow.
And since Lyft wants to stay competitive,
Right.
they've adjusted their own base prices accordingly.
So they're saying we're not going to be the most expensive option.
Exactly.
Mhm.
They're willing to match lower prices to stay in the game, even if it impacts their margins in the short term.
It makes sense they've put in a lot of effort to achieve profitability
Right.
and build a strong financial foundation.
Yeah.
They don't want to lose ground now,
Yeah.
but how sustainable is this in the long run?
It's a big question. Lyft's leadership seems to think they can balance competitive pricing with profitability.
Okay.
They point to a few key factors.
I'm all ears. What are those factors?
Well, for one, they've gotten incredibly efficient with customer incentives.
Okay.
Their goal was to increase efficiency in this area by 10% in 2024.
Uh-huh.
They actually blew past that goal and achieved a 17% reduction in incentive spending per ride.
Wow, that's pretty impressive.
Yeah.
So they're essentially making smarter use of incentives
Right.
to attract and retain riders.
Exactly. They're also making the most of their fixed costs.
Okay.
They achieved over 100 basis points of fixed cost leverage in 2024.
Okay, break that down for me. What does that actually mean?
Think of it like this. They're getting more value out of their existing resources.
Okay.
It's similar to getting more miles per gallon out of your car.
Okay.
It helps save money and boost profits.
That's a great analogy.
Thanks.
So they're being more efficient with incentives.
Right.
They're making the most of their fixed costs.
Uh-huh.
And let's not forget those higher margin services.
Yeah.
Lyft Black and Lyft SUV.
You go, those offerings are getting more and more popular,
Okay.
and they command higher fares that helps offset the pressure on margins from those lower priced rides.
It's all about finding the right balance in the ride mix.
Yeah.
Offer something for everyone,
Right.
but make sure those premium options are attractive and easy to get.
Absolutely. And then there's that wild card robo-taxis.
Right.
If that technology goes mainstream, it could completely change the economics of rideshare.
No more driver costs. That would be huge for profitability.
There's definitely that potential, but as we discussed before, there are a lot of unknowns with robo-taxis.
Yeah.
The regulations are still evolving, Public acceptance is a hurdle, and the technology itself is still developing.
So it's a long-term play with high potential, but also high uncertainty.
Exactly. Now, another piece of the puzzle is Lyft's partnership with DoorDash.
Right. I read that partnership is generating a record number of scheduled rides for Lyft,
It is.
and those tend to be longer and more profitable.
Right. It's a win-win for both
Got it.
companies. DoorDash gets reliable transportation, and Lyft gets those higher margin rides.
Plus, it gives Lyft access to new customers
Yeah.
who might not have used their platform before.
It's a great way to expand their reach beyond traditional rideshare users now, in addition to these operational and strategic moves.
Yeah.
Lyft is also taking steps to optimize their financial position.
You're talking about that $500 million share buyback program
Yes.
and their plans to repay their convertible notes, right?
Yes. These moves show that Lyft has confidence in its future and is committed to giving back to shareholders. That buyback program sends a strong message.
What's that?
They believe their stock is undervalued.
It's a powerful statement. They're backing their belief with real action.
And by repaying those convertible notes, they're further reducing their debt. That makes their balance sheet stronger and gives them more financial flexibility going forward.
So they're setting themselves up for sustainable growth.
Precisely. It's important to remember that amidst all these numbers and strategies, there's a human element to Lyft's success.
I'm intrigued. Tell me more.
Well, Lyft's CEO, David Risher, often talks about how important their drivers are. He calls them customers,
Interesting.
and emphasizes Lyft's dedication to making their experience positive.
That's an interesting way to frame it. Most companies call their drivers contractors or partners.
It's subtle, but it's a shift. It shows that Lyft recognizes their drivers are crucial to their business. Driver satisfaction is a top priority.
And we've seen that in their actions, right? They have the driver earnings commitment, their partnership with Merit America for skills training, and they're using AI to improve driver support.
You're exactly right. These are tangible examples of Lyft's commitment to drivers, and as we talked about earlier, it's leading to that strong driver preference over their competitors.
Which in turn leads to better service for riders. It's a great cycle.
Exactly. Now let's turn to another aspect of Lyft's business that's sometimes overlooked: their media strategy.
You mean Lyft Media, their in-app advertising platform?
Yes, they see a lot of potential. They've already hit an annualized run rate of $50 million with those in-app ads. And their goal is to double that to $100 million by the end of next year.
That's ambitious. What are
Yes.
they doing to drive that growth?
They've introduced new ad formats like map takeovers and full-screen vertical video ads.
Okay.
These formats are designed to be more engaging and immersive for riders.
So they're tapping into their captive audience,
Yeah.
giving advertisers a new way to connect with potential customers.
Exactly, and they're doing it carefully. They want to make sure ads are relevant and don't disrupt the user experience.
Yeah, that makes sense. No one wants to be bombarded with irrelevant ads when they're trying to book a ride.
Now, one final thing to consider is the regulatory environment that Lyft operates in.
Right. The world of rideshare is heavily regulated, and those regulations are constantly changing.
Lyft has dealt with its share of regulatory challenges over the years, from disputes over driver classification to accusations about misleading statements on driver earnings.
And I heard they recently clashed with San Francisco, their hometown, over tax calculations.
Yes, they did. Lyft filed a lawsuit against the city claiming they were overcharged by $100 million in taxes over the past 5 years.
That's a lot of money. What happened?
Lyft says the city incorrectly included driver compensation in their revenue when they calculated those taxes.
That situation really highlights how tricky it is to navigate the regulatory landscape, especially as the gig economy continues to evolve.
It does. Lyft has to stay ahead of the curve when it comes to regulatory compliance.
So they need a strong legal and policy team to manage these challenges.
Right.
And make sure they're playing by the rules.
Absolutely. With all of that in mind, let's move on to the final part of our deep dive. We'll explore the broader implications of Lyft's journey and how it could shape the future of transportation.
Okay, so we've covered a lot of ground in this deep dive into Lyft.
We have.
We've looked at their incredible growth,
Yeah.
their customer obsession, and those bold moves like price lock and their big bet on robo-taxis.
Right. We also dug into those competitive pressures
Yeah.
that are impacting pricing their key partnerships. Their impressive financial performance and that constantly changing regulatory landscape they have to navigate.
It's been a whirlwind tour, so what does it all mean?
Yeah.
What's the key takeaway for our listeners?
I think the big takeaway is that Lyft isn't just a rideshare company. They're actively shaping the future of transportation.
It seems that way.
They're pushing boundaries, challenging the status quo, and embracing new technologies.
They're not just riding the wave, they're trying to create it.
Exactly. And they're doing it with a laser focus on the customer experience for both riders and drivers.
Right.
They know that to succeed, they have to keep everyone happy.
And they're not afraid to take big swings.
Right.
Like that investment in robo-taxis.
Yeah.
It's a high-risk, high-reward strategy.
It is.
But it could pay off massively.
Now, as we wrap up, I want to leave you with a few questions to think about.
Okay, Amy.
First, will Lyft's service-driven approach be enough to win over riders in the long run?
Okay.
Can they overcome those ingrained habits and convince people to switch things up?
That's a tough challenge, but they've made some real progress so far.
Second, can they really navigate the complex world of robo-taxis and disrupt the industry?
Yeah.
Will regulations, public perception, and the technology itself slow them down?
There are a lot of unknowns there.
And lastly, what role will you play in this transportation revolution? Will you be one of the first to hop in a robo-taxi?
It's a good question.
Will you demand more sustainable and equitable options?
These are questions we all need to consider as we head towards a future where transportation is increasingly automated, personalized, and interconnected.
Lyft's journey is a microcosm of the larger changes happening across the entire transportation sector.
Yeah,
It's a story worth following closely.
absolutely. And if you enjoyed this deep dive into Lyft, make sure you subscribe, hit that notification bell, and give us a like.
Until next time, keep exploring the world with a curious mind and a critical eye.